Live with the mortgage calculator. Today we're going to go through some live interest rates, and then we're going to do a deep dive into DSCR No Ratio Loans. We'll wait just a minute here to go live on all the different platforms and give everybody a chance to tune in. Thank you, everybody, tuning in from all the different platforms: YouTube, Facebook, LinkedIn, Spotify, Apple Music. Appreciate everybody tuning in. We put the chat up there on the screen, so feel free to drop a comment there as you tune in the chat, and we will get started in just a moment here. I see some comments already coming in. Appreciate it, everybody. Good morning. Ready to get back to the work week here. And a great topic here for today as well. All right. Looks like we are live on all the different platforms, so we can go ahead and get started. As you tune in, please keep dropping comments there in the chat, and you can also drop any questions you have about our deep dive topic here today in the chat. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every weekday at 11 a.m. Eastern is go through some live mortgage rates. So we're going to go through some live rates of some different programs, and then we're going to do a deep dive into DSCR No Ratio Loans. Now, because we specialize in non-QM and DSCR loans, this is something that we work with on a daily basis here at the Mortgage Calculator. So our sales manager, Jose, with 28 years of experience, is going to do a deep dive into DSCR No Ratio Loans. But before we do that, we'll do what we do every morning, which is pull up the live interest rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are looking like today.
All right, let me switch my screen and we will check it out. So this is our pricing tool for our team of mortgage professionals. It's going to show us the general rates for today, October 23rd, just after 11 a.m. Eastern. So all of our general programs are live here. So we'll set up a basic scenario and compare the APR across the program. If you'd like a full loan estimate, please get with one of our team members. We have over 400 licensed loan officers in 24 states. So for our demos, we'll use a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. We will find the lowest rate options here, and we'll compare conforming conventional with FHA. And then we'll check out expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs. We also have VA and USDA. VA is only for eligible vets and active service members. If you are eligible, let us know. And USDA is only for eligible properties. If you do happen to be shopping in one of those areas, just let us know. We'll start with conforming, purchase, 30-year fixed, standard loan, primary occupancy, single family home, 1 unit, state of Florida, county of Miami-Dade. For all the demos, we use an estimated credit score of 760, an estimated debt to income ratio of 40%. So let's see what the conventional rates are this morning. I believe that's a touch lower than they were last week. But these options are a little bit too expensive. So a little bit misleading here. So a good APR option, 7.125, 4.375 discount points would probably not be reasonable unless we had some seller credits. But that puts the APR at 7.404. Now, the more standard ones that have more realistic options that won't require any seller credits or anything would be this option here, 7.5 rate, 2.25 discount points and cost for the final APR of 7.708. So that option is around what it was last week as well. So with the rates being very volatile, it is a little confusing here when the different programs pop up and just a lot of movement in the programs. Now, if our customer doesn't qualify for conventional, the next option we usually want to check out is an option for FHA. FHA allows a little more leniency on credit issues, as well as a much higher debt to income ratio. But to compare apples to apples, we'll keep everything exactly the same. And then we'll just compare the different programs, and that way we can compare the APR here. I believe this is a touch higher than it was last week. Option here at the top, 6.875 rate, 2.25 discount points and cost, puts the final APR at 7.510. So to compare, the realistic option there for conventional was at 7.7 something here. FHA is a touch cheaper if our customer qualifies for both. And this APR does include the updated mortgage insurance, the upfront and yearly. So those new amounts this year definitely help our customers that must use the FHA programs. Now, where we love to specialize here at the Mortgage Calculator is if our customer doesn't qualify for either program. Unfortunately, many other banks or lenders would have to deny that customer. But that's where we love to assist with our expanded guidelines, where we have over 5,000 non-QM programs using alternative income. So we'll keep everything else exactly the same. The only thing we're going to change here is a new option that popped up for income. So full doc is what we use for conventional and FHA. So if we don't qualify using our full doc 2 years tax returns, we'll typically use one of these other options, such as our asset-related options, business bank statement options. The investment property options are only for investment properties. Personal bank statement 12-month is the program we always use for the demo here. That's the most popular one. We have RSU, stated, VOE, 1099, P&L, no income, CDFI, all kinds of different options. But the most popular here is our 12-month bank statement program, and that's for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit 2 years of tax returns, may have various write-offs or reasons where they might not quite qualify, or just may need a little bit more income. So we'll solve that problem. No tax returns involved at all, just their last 12 bank statements to determine a debt to income ratio of 40% in this example, using just their cash in the bank, no tax returns involved. So many times our self-employed borrowers qualify for double or triple the income and can therefore get that home they really want. So let's check out the bank statement options this morning. All right. So again, it's a little bit misleading when we have the rates going crazy. This option could be viable with some lender credits, a 7.5 rate, 4.625 discount points and cost. So that's probably a little too much unless we get some credits. Puts the final APR at 7.688. Now we have another option here. I believe this option would not be applicable. It would be this option. So 7.875 for 2.5 discount points and costs, puts the final APR at 7.992 for our bank statement options. So one of these is actually a touch cheaper than conventional, but only if we can get those lender credits or seller credits to offset that. However, this option is just a touch higher than conventional. So conventional, remember, was 7.7 something. Here we have a reduced doc, aka bank statement option, for 7.992, just a touch above. So tons of different options here. If you scroll down, you'll see we have dozens and dozens of bank statement options. Some of these have a little bit higher rates and costs, may allow bankruptcies, foreclosures, other types of credit events, and may allow us to calculate the income a little bit differently. So please get with our team. There's literally hundreds of different options here to use bank statements. And now we'll do our last two examples for investment properties. So we'll set up the same scenario here, 80% loan to value, 20% down payment. We can compare our conforming conventional investment property options with our expanded guideline non-QM investment property options. Government programs like FHA, VA, USDA do not work for investments. So we'll start with conforming conventional. Everything will stay exactly the same. The only thing we've edited here is the occupancy. So we'll see the adjustments that the conventional programs have for investments, which is a little bit crazy right now with the volatility in the markets. So yeah, as expected, these are not realistic options. So these first three options show a kind of a teaser rate, but these discount points would not be legal, basically. So this would not be a viable option. So we'll skip over these 7 and 8 point discount point options. Obviously, that wouldn't be selectable. So let's scroll down to where the real options are here. are still pretty unrealistic. But the reason we want to highlight this always is we have a portfolio option. So this is a portfolio option. It is not a standard conventional Fannie Mae, Freddie Mac loan. This is using the same exact guidelines and underwriting system. However, our partners service this themselves. Obviously, it's a slightly different variation here. And you can see, especially for investment properties, it makes a huge difference to not have the conventional adjustments. So best option here, 7.375 rate, 3.5 discount points in cost, actually reasonable there. For final APR, 7.625. So absolutely amazing option there. Now the first realistic, or maybe not even realistic, but the first conventional option here, 7.875 rate, 5.75 discount points in cost, and the final APR of 8.2. So conventional, a little bit crazy right now with the adjustments. Definitely would have to probably get a little bit of seller credits maybe to offset these high discount points costs. So definitely recommend to check out the portfolio options as the conventional rates are going a little bit volatile. Now, the other option besides the portfolio option here are the non-QM options, which are much preferable for our investors. So for the final demo, we'll set up investment property. We'll set up the same scenario. And this time, we will get some more realistic options under expanded guidelines, also known as non-QM. So for income options for non-QM investment property, the most popular one by far is going to be our DSCR option because it doesn't require any income or employment info or documentation from our borrower. We simply use the estimated rents from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA, the mortgage expenses, aka the property cash flows, that's a ratio of 1.0 or higher. We have options for ratios under 1.0. For the demo, we always put 1.5, which is the highest option the computer will take. And the final thing we must select is a prepayment penalty. This is standard. We always select 3 years for these programs. There are options for 0, which will limit the amount of loan programs that show up and cost more. There are also options for 5 years, which will, again, limit the amount of loan programs, but save our borrowers some money if they want to hold the property long term. 3 years is standard, so that's what we use for our demo. So let's check out our DSCR options, which will hopefully have much more realistic points and fees. Here we go. So great option here at the top, 7.875 rate, very straightforward, 3.25 discount points and costs, very realistic. Final APR, 8.017. So this option beats all the true conventional options. There is that one portfolio option for our full doc investment borrower who might be interested in that full doc portfolio option. But I'd say 99% of investors will take this DSCR program over a conventional program, especially when it's actually cheaper by a little bit here today. Remember, the cheapest option was 8.2, and even then the discount points were a little bit unrealistic. So tons of different options here. This option doesn't quite beat conventional, but still has more realistic discount points. So I'd say 99% of investors that look at those quotes side by side will still choose this option. Now, if you scroll down here, we have tons of different DSCR options where the rates and terms may be a little bit higher here. These programs may allow bankruptcies, foreclosures, other types of credit events, and other issues that would otherwise cause us to not qualify. And we can also use different income types here, such as short-term rental income. And some of these programs at a little bit higher rates and terms may allow lower DSCR ratios, which is our topic for today. So let me go ahead and switch my screen here. Please get with our team. They can find which one of these hundreds of different DSCR options fit best for you. But let me go ahead and switch my screen and we'll bring up the topic for today, which is going to be, again, like usual, a variation of what we present every day. So DSCR no ratio. As I mentioned every morning, there are options for DSCR under 1.0 ratio, which is the pretty standard option, right? Property usually needs to cash flow. However, we do have no ratio options, aka the ratio's under 1 or even all the way down to 0.0, aka we don't really measure the ratio in the underwriting decision here. So A very unique version of DSCR. It comes in handy when we have short-term rental properties, right? That the long-term rents don't come close to hitting the 1.0 DSCR, but our borrower obviously is buying the property for a specific reason and just needs to get the financing. So we then may switch to a no ratio option or one of the other various options that allow short-term rental income. But this is a tool that can come in handy in a lot of different situations. So, Jose, you want to highlight a couple examples here? I'm sure you have some true no ratio options as well as some reduced ratio options. Is that correct here?
Yes, sir. No ratio, definitely one of my favorite loan topics to go over, because for those people who are just getting introduced to the DSCR world, it's a mind blower, right? You can basically have a property with less than a 1-to-1 cash flow and have it basically have the borrower qualify for the loan. So it's amazing. And it just is a testament to the liquidity right now in the non QM secondary and especially DSCR. So this is excellent for those trophy properties, for example. Can't find any comps. No one ever rents them out. You're buying it. Maybe you're going to do short-term rental. You have it figured out how you're going to make money. That's great, because this is one excellent way to be able to purchase that property for which there appear to be no rental comps. So the no ratio program, very flexible in how we can reach that objective. And as Nick did mention, it is one of our favorite tools also for those short-term rental properties. Same scenario, short-term rental property, can't find any comps in the area to support what you need. You know you're going to make money. You have a solid business plan. This is the great tool to also reach that objective. So let me share with you some purchase options and some refi options. So first, we have at our maximum LTV of 80%, we do have a no ratio or 0.75 to 0.99 DSCR option, 80% LTV here. So we have 10.125 is our lowest cost option, and you can buy that down to 9%. Now, please be aware there are very limited uh, options for DSCR loans at an 80% where it is less than 1.0. But at the mortgage calculator, we do like having all the solutions for our borrowers. So I will show you the relation now, because here at a 75% LTV, which is more the, I guess, common or traditional no ratio for the non traditional no ratio product, you can start at 9.75 as your par rate, but you can buy that all the way down to 8.375. So if I show over here this one, you're looking at about 9.125 at the same cost that the 75% LTV has, 8.375 as the rate. So again, just that we can do this product is amazing, that we can offer this to a borrower, much less at these great rates. And then another mind blower here, the less than 0.75 DSCR. So technically, I mean, the property could have a 0 DSCR. I mean, that would never be the case, but we are going to analyze what this is saying. You can anything below 0.75 and they will do it. Very good rates also. 10.75 is almost at par, and you can buy that down to 9.75% for our true no ratio 75% LTV. So now throw in a couple extra little twists here. So these are similar strategies that we would employ if we were trying to stay above a 1.0 DSCR. So obviously our first option would always be to try to stay above 1.0 DSCR whenever possible. But if we're trying to stay above 0.7, at 0.75 or above, we could always, for example, go to a 40-year amortization, right? That's one of our options here. So this is our 80% LTV option, but throwing the 40-year twist, and not much of a price adjustment there, right? I think we're looking at about a 0.625 of a point price adjustment to go 40 years, but many times that could be the difference between going with this program or the true no ratio. And now our no ratio 40-year, less than 0.75. For those that just want that 40-year amortization, well, here it is, our no ratio. This is at a 75% LTV. Going to our 40-year, you have 10.25 lowest cost option and 8.625 lowest rate option. And our now throwing an extra mix in here. If the 40-year didn't do it for you, but you had to add the interest only component. Now, please note, once we do go interest only, our other option at an 80% for 40-year is eliminated. Our max LTV is 75%, and we're combining 40-year amortization plus interest only. So we can do our 0.75 to 0.99 DSCR with 10.625 being our lowest cost option and 9.625 lowest rate option. And last but not least, I'll throw in a couple of refi options for you. Now, you will note something pretty cool about the 0.75 to 0.99 DSCR option. This particular option has the same LTV, whether you're going purchase or whether you're going refi with this particular investor. So we have 10.49 is our par rate, and you can buy that down to 8.625. And this is cash out refi, and this is the max LTV, which is 75% for a no ratio, 0.75 to 0.99. And last but not least, our true no ratio, less than 0.75 DSCR refi cash out is maxed at 70% LTV. And you have 10.875 is our lowest cost option. And you can buy that down all the way to 8.875. That's a pretty deep rate sheet there. 8.875 is our lowest rate option.
All right. I don't see any other questions. All right. I do see one question. When will the interest rates ever go down?
That's what everybody wants to know, huh?
General question. That's what we're checking on every morning on this show.
Well, I think that if you listened to last week's training that we went through and we highlighted a lot of the main items that are taken into consideration, you'll be able to figure that out. Right now, Fed believes that the economy is still a little too hot, right? So the only way they feel they're going to be able to control inflation, which is the main goal, is to slow the economy down. And the tool that they have basically for that is Fed funds rate and their open market activities as well. So just, if they think that it's still a little bit too hot, we don't think that anytime soon, like next week or next month, they're going to start going in the opposite direction. They're going to want it to stabilize first, get probably another reading that it shows it's stable or maybe starting to track down a little bit, and then they'll ease up on the tightening of the money supply, which is essentially that's what they're doing.
All right. So remember, we do this 11 a.m. Eastern every weekday where we go through the live rates. And we also do a deep dive into a different topic like we did with DSCR No Ratio. So We will be back here tomorrow. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody. Have a great day.